if you're flipping high volume, you will have losses, especially right now. If you're not prepared to break even or have a little bit of a loss, you probably shouldn't be flipping right now.
Welcome, Arianne. How are you? Welcome to Real Estate Hacking Live. Arianne is a medical professional.
Arianne. That's my fault, Arianne.
Arianne. Sorry. She's a medical professional turned real estate investor. She co-owns over 2,000 units and has flipped and wholesaled more than 500 properties. She also educates others on building wealth through her YouTube channel, Ask Arianne. So welcome to Real Estate Hacking Live.
Awesome. Well, thank you for having me, guys.
Absolutely. Thanks for coming on. I know you've got a lot going on and been thinking about y'all. So with I've loved watching your journey with real estate investing. You and your husband have been very successful in what y'all have done over the past few years, and how it's evolved. So from this point where you're at now, how are you? And you can tailor it two different ways. How are you personally, and then also the investors, like the passive investors you're working with? How are you using real estate to beat inflation?
Right. Yeah. Like, as you guys know, inflation's crazy, but we also have all the financial market distress that's everywhere. So when I talk to just friends, family, and investors, everybody, like, nobody really kind of knows what's happening, right? Like, we're kind of in this, what do I do with my money, right? Because if I leave it in the bank, it's getting inflated. The inflation is just killing my purchasing power. But how do I actually pick what to invest in? Because I think we all know that at some point, some assets aren't going to make it, right? Like, stocks obviously aren't doing very well right now. We've invested in some alternative assets like cryptocurrency. That's obviously not doing well right now. Really, the only thing that's doing well in our portfolio is our real estate portfolio. But it's not all real estate portfolios, right? Like, I think some people still think of real estate like the stock market, where I'm going to buy a house, I'm going to sell it in 5 years, and I'm going to make a lot of money on the sale. That has been prevalent over the last 2 to 5 years, right? Especially the last two, because if you bought anything in 2020, like, you sold it for 20% or more in 2021.
You could throw a dart and land on a good deal.
Right. But I think that because that's what we've seen the last few years, people forgot what the fundamentals of real estate actually are.
Mm-hmm.
And that's why people are scared about this asset class, even though it's really the only one that's still kind of holding right now.
Right? Yeah. I was talking with some folks on TikTok, which, you've got a great, which I'm live streaming on TikTok. So follow Arianne if you're not already. If you take Houston, for example, in 2008, like, if that is a worst case scenario, at least it has been in our lifetime financially, prices didn't really fall. I know they did in some markets, but in Houston they didn't. They flatlined, and they flatlined for several years. And investors that bought during that time and still own today, like, they've got a multi-million-dollar portfolio, and I know some of them. So it just goes back to the fundamentals. If you're just buying purely on appreciation, especially hyper appreciation, it's kind of you're putting yourself in a lot of risk. And are you having that conversation with flippers? So I know we were both in a flipping mastermind, and
but mainly just normal investors. Because again, like, I feel like the last few years, everyone kind of thought the money was in the appreciation.
Mm-hmm.
But we got to remember there's actually 4 ways to make money in real estate, in all investments, but some other investments don't have the 4 ways, right? So one is appreciation. The other is cash flow. So when we have a property, people pay rent, we pay all the expenses and the mortgage, and we have a little bit extra. So that's cash flow. Then there's tax benefits, which is a hidden way to make money, but that's why a lot of millionaires and really wealthy people have real estate, is because a lot of it is tax benefits. And then we also have the loan pay downs. So most of us buy real estate with a loan. Every year we cut off a chunk of that loan principal, and that increases our equity. So even in an environment like this, where you said maybe we're going to flatline for the next 2 years. Some investors are thinking, oh, I don't want to invest in anything because we're just going to flatline. What's the point? Well, even if appreciation is flat, you can actually still make those other three ways: cash flow, loan pay down, and the tax benefits. So you can still generate a good return, even if from the outside looking in, from the asset price, maybe you're not making a whole lot of appreciation. But if you invest in real estate with thinking of cash flow, tax benefits, and loan pay down, that's still going to beat inflation, and you're going to be in a better position.
Yeah, and appreciation's different depending on the class. I mean, single family appreciation, there's different fundamentals at play than multifamily, because multifamily is primarily, it's income driven. You're buying a business. Right. Single family is more just based on like kind comps around the community. But how do you feel about flipping at this point? I mean, the conversations I've been having is be cautious, be very conservative on your numbers, and add extra padding, particularly with days on market and the price. Make sure you have that cushion. And then my cherry on top, which is something that we didn't always do. We said we always did it, and we stopped doing it, and it hurt us, and then we started doing it again, which is make sure it can cash flow if you have to rent it out. Meaning you can't meet your price, and you got to make a choice: sell for a loss or just cash flow, and then wait it out. Because eventually, all properties over time, if it cash flows, you'll be okay. May not be your greatest deal, but you'll be okay. How are you advising folks that are either getting into flipping or they're actively doing multiple deals a month?
Yeah, so we used to be a high volume flipper. We actually stopped flipping houses last year, but we used to flip 100 houses a year. So we are definitely very attuned with how that goes. And when we talk to other flippers right now, it's have a lot of cash reserves. If you're flipping high volume, you will have losses. It's that, especially right now. Like, that's just, you have to be prepared for that. And if you're not prepared for that, you probably shouldn't be flipping right now, right? Like, if you're not prepared to break even or have a little bit of a loss, as a worst case scenario, like, that's going to happen. So have a lot of cash reserves. And then, yes, just be very, very conservative, right? Like, before we were looking at comps that sold in the last 3 months and using those as comps, you need to be looking at pendings right now and seeing where those are going under contract, so that if those are lower than the comps from the last 3 months, you're adjusting your after repair value. And ideally, you even go down like 10% for that and see if that's still okay for you. If you're still going to make a little bit of a profit, if it goes even 10% below that, then that should be okay. And then just speed. The name of the game is speed. It's like
100%.
Flipping has always been a hot potato. When we flipped houses, usually our turn time was 4 weeks, right? We bought it, renovated it, listed it within 4 weeks, and then usually we're closed another 4 weeks after that.
Yeah.
That is probably the maximum I would plan for.
Yeah. You want to get in and out of these things very quickly. But yeah, that's it. I mean, the biggest risk really is just in that transition point. But once things stabilize, it just goes back to fundamentals. But 6-month comps right now, just say, okay, you can pull those, but set it aside. You want to be looking at 60-day comps. But in any case, well, thank you very much, Arianne. Look forward to seeing you again soon.
Chris.